My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish harami just on Friday and a respite from the recent bullishness, as the overhead resistance from the lesser Fibonacci levels at 118.87 and 118.97 worked, but only on a closing basis. Overall, this is still a continuing move up and away from the upper trend line, currently 117.63 of the descending wedge pattern. We're still approaching target X on the upside. Now, target X is the potential target for the upside, on the upside for the descending wedge pattern, and is in the 119.30 area. The only issue has been a cap on the rise of the cap produced by the rise of the two lesser Fibonacci levels. Beyond target X, we have the continuation lower diamond trend line, 119.35 from the December 2019 to May 2020 diamond pattern. However, I suspect that may not be that strong a resistance, and we may well have to rely on the 119.75 area, which contains the 50% Fibonacci line in the November 2020 to January 2021 move. And most interestingly, the flatlining medium moving average, currently 119.74, and the approaching and declining short medium moving average, 119.75. We will have an imperfect dead cross of these in the next day or two. So far today, a lower open, but prices have tried once more and again started testing and seemingly becoming bogged down by the two overhead lesser Fibonacci levels at 118.87 and 118.97. Cable, aka sterling against the US dollar. A bearish harami and attempted key reversal down on Friday, ending up as an outside day in the end. It was a reaction to all the recent bullishness. The market once again tested up to the potent looking short medium moving average, currently 139.56, but was once more rejected, enough that prices closed down, well down, below the flatlining medium moving average, currently 139.22. Of the two, the short medium moving average is the more powerful resistance right now. All this recent move higher has been an echo of my words from 2 weeks ago on how the tri-lower seen during mid-July was the first challenge to the long moving average since September of 2020. Additionally, that challenge back in September last year was unsuccessful as well. So far today, try back up towards the medium moving average where we've been stopped, and push back down now, for now, and looking like an indecisive spinning top. Euro sterling. A bullish engulfing pattern on Friday and a follow-on to the previous session's bull hammer pattern, but that is perhaps not the main feature. The market nevertheless continues within the May to date based bear channel, currently 84.67 up to 85.55, and is obviously cautious about testing lower. I suspect this may have to do with the 84.70 lows seen back in April. Overhead, we still have the strong resistance from the flatlining medium moving average, currently 85.98, and the slowly descending short medium moving average, currently 85.79. Okay, so the main feature. As I've been pointing out now for the last 2 weeks or so, if on Friday night, that's past Friday night, we closed either over 8600 or under 85.70, then we'll be on for a monthly key reversal. Well, prices, as you can see, closed a little under 85.70, so we have a monthly key reversal down here for July. Don't expect any immediate reaction to this. It is a longer term pattern, and it doesn't preclude any immediate countering moves either, but it is worth noting. Now, so far today, a lower open, but then a move back up over Friday's high and up towards testing the upper bear channel and the short moving average, currently 85.54, that is entwined around it. US dollar against the Indian rupee. A bullish harami on Friday as the market fought back up over the 50% Fibonacci line of the February to April 2020 move at 74.26, as well as a first rejection of the support of a little below from the late June congestion between 74.10 and 74.20. Overhead is the resistance from the short moving average, currently 74.5, and the rising lower trend line, currently 74.63, of the recent ascending broadening wedge pattern, as well as the 50% Fibonacci line of the April 2020 to February 2021 move, also at 74.63. All this has been in the shadow of the recent combined immediate countering key reversal up and bullish engulfing pattern, plus bullish opening white Mariposa. Yet with all that bullishness, it still didn't seem enough to halt a try lower. Why do I say this? Well, a bigger shadow has been cast by the weekly key reversal down 2 weeks ago and the move late last week below the recent ascending broadening wedge pattern formed over June to July. All the bullish reactions recently to try and push back up within the wedge pattern just didn't seem good enough. Therefore, an initial downside target X for the ascending broadening wedge pattern is still there in the 74.05 area, whilst a further secondary target X1 is down in the 73.80 area. Now, so far today, an ever so slightly higher open and a try up towards the arching lower short moving average before a turn back round towards the open and looking like an indecisive doji cross right now. US dollar against the Brazilian real. A reactionary bullish engulfing pattern on Friday after nearly 2 weeks of declining prices and rattling the cage of the descending upper time, currently 5:15.36 of the late May to early July bearish Andrews pitchfork. Now, this pitchfork has been testing me by looking like it would not last another day, every day, in succession for nearly 2 weeks. Well, on Friday it gave way. Prices opened below the previous session's combined bearish black crow and hammer pattern and immediately took off, up through the lesser Fibonacci line at 510.87, declining short medium moving average currently 512.95, the upper time itself, the short moving average currently 517.75, and finally the congestion in lows at 520.25. Overhead we have the congestion at 525.67 and the lesser Fibonacci, recent Fibonacci level at 526.79 before looking at the recent highs of July and the declining medium moving average, which is currently 530.61. The one question I have for today is whether this move up was purely reactionary or if it is the beginning of something else. You see, the argument for the late June to date action being a possible double top instead of a bullish halfway hesitation has been growing each day, but it is still early yet for either, and it may switch. This all is in the shadow of the remarkable number of dead crosses we've seen here since late May. Everything now depends on what happens today in relation to the bearish Andrews pitchfork. US dollar against the Mexican peso. An indecisive spinning top on Friday after the market found some semblance of peace as it formed either side of the influential, gently declining neckline of the February to March head and shoulder stop, currently 1984.12. Recent action was all seemingly part of this plan to draw prices towards the neckline as it has been since April by one aberration. This is acting as an attractor for this market, this neckline. Overhead we have the flatlining short medium moving average, currently 1996.95, and its recent partner short moving average, currently 1996.25. Overall, Friday's action is another example of the extensive indecision we've seen previously in this market. Indecision that stretches from the fall back to these levels originally seen in mid-April, but which recently started again in late June. Additionally, we finished just within the April to May base congestion zone between 1985 to 1995, with the neckline lower still, currently 1959.01, of the late January to mid-May head and shoulders top acting as support. Plus there's also a support band at 1971.68 in between. Now, so far today, higher open, but then prices reverted back to type of move down to just below the neckline of the February to March head and shoulder top, and interestingly looking like a bearish engulfing pattern right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.